It is a good morning. So I've seen a lot of people unsure exactly how the Apex rules work. And I thought I would make a video since I read a lot about it and I fully understand it. So maybe this will help clarify the rules for some of you people. So first of all, the promotion has been extended till Thursday. So instead of Monday, you have till Thursday for the 90% off and the 250K for the price of 50K. So if you haven't gotten that and you want to get it, I have a code below, which is an affiliate code. You can use that on checkout and it helps me out. So let's get into the rules. So on the challenge, also known as the evaluation, there are no rules. As long as you hit the profit target before hitting your drawdown limit, you get the account and then you can activate it. So the way that works is they have unrealized trailing drawdown. So if you have open profit in a trade, whatever your maximum equity is, that is what is counted, and then you have whatever the drawdown limit is to the downside based on the highest tick that you were in profit. So as long as you hit the profit target before hitting the drawdown, you pass the account. And to do this, I recommend having a take profit limit order instead of having a trailing stop which you push really tight, because no matter what, if you get stopped out in profit, you're still down on the trailing drawdown limit, even if it's a little bit. Whereas if you use take profits, you are always at your maximum trailing drawdown because you have never been in a more open profit than you currently are because you exited on a limit. And then you can basically take more trades and you're never really at risk because of the trailing drawdown, especially if you're using a lot of leverage. And as long as you don't take a losing trade, you will always be at the maximum trailing drawdown. Now, as for the rules, they have been talking about this 3-to-1 risk to reward. And what that means, they're not talking about 3R, they're talking about 0.3R. So basically what they want to avoid is people that are basically doing this. They're having a very small take profit and they're having a humongous stop loss. So this is 0.3R and this is what they're trying to avoid. So first of all, to have a profitable system like this, you would have to win like more than 80% of the time. So this is not very realistic anyway, and they just want to avoid people doing this and gambling without actually having an edge. Because if you do this a bunch, yeah, you will take a bunch of small wins, but then the one time you are wrong, you're just going to blow through everything. And this rule only applies for after you pay the activation fee and you're on a funded account. So they don't really care how you pass the evaluation, but once you are funded, they want you to trade like a trader and not a gambler, because they have to really pay you out. And as a trader, you're not useful to their business if you're gambling, because then they can't copy your trades. So this is the first rule. And the other rule that they were talking about is not adding on to losing trades. So let's say this market is going down. They don't want you to buy. And then when it comes over here, you're barely in profit and you take a little bit of profit off. The reason they don't want you to do this is because if you do this in funded accounts and the market keeps going down, it'll get completely blown. And once again, you are not useful to their business since they can't copy your trades if you're trading like a gambler, just trying to get out of drawdown and allowing for big open losses just to get out a break even, and sometimes it'll never even come back and then you'll blow out completely. So all of these rules are for the funded accounts. If you have any more questions, leave them down below. But yeah, that's going to be it, and see you guys probably at some point this week.